In this week's Property Insider Chat, Dr. Andrew Wilson and I explain why higher vacancy rates won't be bringing any relief for the rental crisis that tenants are experiencing anytime soon. We also discuss the latest housing approval figures and what they mean. And there's not particularly good news there. And as always, we explain what's happening in our auction markets as a good in-time indicator of how both buyers and sellers are feeling. If you're keen to keep up to date with what's happening in our housing markets and the economy, please subscribe to this YouTube channel and click the little bell icon so we can let you know each time a new show comes out. Last week, we reported My Housing Market's end-of-month figures showing that property prices have continued rising around Australia. That's 18 months in a row now, meaning many first-home buyers are facing a heartbreaking battle. And it's doubly hard because rents have been skyrocketing. In today's Property Insider Chat with Australia's leading housing economist, Dr. Andrew Wilson, Chief Economist of My Housing Market, I'd like to discuss the latest My Housing Market rental report. Let's see if there is any relief in sight for tenants. Hi, Andrew.
Yes, good day, Michael. And you're right, of course, it's a bit of a horror story there for first home buyers trying to get into the market. It's a confluence of storms, isn't it?
Yes.
That higher prices, of course, prices are rising generally. We've got higher interest rates, and we've got higher rents, just really showing no sign of subsiding. We had some mixed news with our latest rent report. It's been interesting. We've seen the vacancy rates flip around a little bit over the last couple of months. We do see that because of some of the seasonal effects that influence the market at this time of the year. Of course, holidays, particularly the semester holidays that for higher ed do tend to create waves on and off of demand for accommodation, particularly in units. But I think the interesting thing is, even though we're seeing a movement in vacancy rates, it's not really translating into any changes in rents, significant changes anyway, particularly for houses. That upward pressure continues, particularly in the bigger markets. There's really no relief in sight, even though we have seen that some of that shifting in vacancy rates over recent months. Rents are still rising.
Well, Andrew, recently I read in the media that there's relief for tenants because rents aren't going up as much and vacancy rates are rising a bit. But the commentator clearly didn't get it. A vacancy rate of around 2% at least is considered a balanced market where there's sufficient supply of rental accommodation to satisfy tenants' needs. But I've had a sneak peek at your report, and it's nothing like that at the moment. So even though vacancy rates have crept up a little bit, there's still a significant shortage of accommodation for anyone looking for rental apartments or houses.
Yeah, that's right, Michael. And of course, we are starting to see more building coming through, and perhaps some change in the impact of our migration pattern, because we've sort of moved past that surge of last year in migration. And maybe that's balancing the market to some degree, but the balance is still well in favour of landlords and well against tenants. And, we just look at those results for asking rents for houses over June. And even though we saw vacancy rates rising across the board, as they fell across the board during May, so it's a little bit of a catch up there perhaps, but we still have the lowest vacancy rate, the highest vacancy rate there of 1.1%. Now that's the highest in Canberra, with Sydney at 1% and Hobart at 1%. But as you mentioned, 2% is usually, and probably a little higher than 2%, is usually the balance between tenants and landlords in terms of rental pressures. And we're not even close to 2% there, miles below it, and below 1% in the major unit markets of Melbourne and Brisbane, 0.9%, which really, is a terribly low vacancy rate, historically low vacancy rates. And that's what's continuing to drive, notwithstanding higher vacancy rates at the margin, continuing to drive higher rents. And that Sydney house rent has now increased again over the month. Now at $820 is the median asking rent for a house in Sydney, up by 0.2%. That's up 9.3% over the year. Melbourne up 0.8%. That Melbourne rental market is certainly reviving, coming from a lower base, of course, but it's on the march, up by 8.5% over the past year. The Brisbane rents were steady, but nonetheless up 10% over the year. Adelaide up 9.4% over the year, following a 1.2% rise. And that Perth market continues to be red hot, with rents up by 2.2% over the month and 14% increase over the year, with just a 0.7% vacancy rate, so which is the lowest of the major capitals. So look, no good news there at all, Michael, really, in terms of the results for house rents. Even though those vacancy rents were lower, the rents were all higher, and they're still pushing 10% plus higher than where they were a year ago. And the thing we need to remember, Michael, is that even though the rate of rental growth is not as sharp as it's been in recent months or over the past year, on that year-to-year comparison, it's because incomes aren't growing at that rate. Incomes are only growing at around 4% at the moment, Michael, and you can't pay what you can't afford at the end of the day. And that's why, even though we're seeing, still strong demand for rental properties, we're not seeing the same significant growth in rents, because incomes aren't just matching the tremendous growth in rents that we're seeing. But still, having to cover a 10% increase per annum in rents is over a consistent period is just unprecedented, and it's a very tough market for tenants, as we keep emphasising.
Well, that's for houses.
Yeah.
Many people are now swapping backyards for balconies and courtyards because they can't afford houses. What's happening in the unit market, Andrew?
Well, perhaps marginally some better news there for in terms of the unit market. Again, we saw everywhere except Darwin, vacancy rates were higher over the month, and these vacancy rates are now starting to push up into the mid numbers, the mid ones. Melbourne vacancy rate now at 1.8%. Canberra 2.2% for units. I think there's a little bit of a seasonal scenario there, transferring from higher vacancy rates into rents. But nonetheless, rents have by and large been steady or rising. A mixed bag really for units over the month. Sydney down 0.7%, but still up 3.8% over the year. Melbourne unit rents up 8.2% over the month, but it was a flat month the previous month, so a little bit of catch up happening there. But unit rents in Melbourne up 7.2%. Brisbane rents down a little bit, similar to Sydney, but still up 7.7% over the year. Adelaide up slightly, 0.5%, up 11.1% over the year. Perth down again slightly, similar to Brisbane and Sydney, but up by 13.2% over the year. So look, some better results there in terms of both the higher vacancy rates and lower rents over the month for June. But look, I think what we've discussed here, Michael, which is interesting, is that we do see a swapping between the tightening house rent market and the tightening unit rent market. And I think, as you say, it's a little bit of that swapping around that's happening in terms of choices that, we see from period to period, stronger choices for houses. But then we see that shifting back to units. But nonetheless, perhaps a little bit brighter news there for units in terms of the tenant's perspective. But nonetheless, it's still a very tight rental market for units. But certainly not any good news to be gleaned from the house rent report.
Well, I guess there are seasonal factors involved. As you said at the beginning of the year, there's lots of students coming in at this time
Yes.
of the year. A few people are not as keen to move over the winter time. They stay indoors a bit. But there's no doubt the rental demand is going to continue, and there's really not much news for new apartments or houses being built to supply rental demand. And on the other hand, we're also hearing that in general, there's not as many investors coming into the market, particularly in some of the markets like Melbourne, where the government's making it a bit unfavourable for them. But we're also keen to hear that there's going to be newer accommodation being built. And recently, there's been some building approval figures come out, Andrew.
Yeah, look, that's right, Michael. The latest ABS building approvals for May were released recently. We saw a rise of 6.6% over the month, which was back-to-back rises following a 1.4% rise over April. But again, a lot of these monthly shifts are generated by changes in unit approvals. Of course, unit approvals can be quite large from month to month, with a large development coming through, and that adds some volatility to the series. And we saw that happen over May. It was a little different in April because we had a fairly consistent smaller rise in units and houses, but back to the usual pattern with a big rise in units generating the increase, that 6.6% overall increase. Units were up 16.3% over the month, houses up 2.1%. We're probably seeing a bit more of a consistent pickup in house building approvals, Michael, versus units. And we'll look at the data in terms of the longer term results for those breakdowns. But Western Australia was tops over the month, total homes up by 4.4%. But our annual growth levels still remain chronically depressed, and the quarterly trend remains low, maybe just showing some signs of picking up the quarterly trend. But when we look at the year-on-year comparisons for national home building approvals, Michael, they're still well below where they were a year ago. And we can see when we do the breakdown of houses and units in the total that it was a big rise for units, 16.3% over the month, houses up 2.1%. But units, when we look at the year to date, so that's the first 5 months of this year compared to the first 5 months of last year, they're down by 11.9%. But as I said, perhaps a little bit better news on the trend there for houses that are up 5.9% versus the same period last year, with totals down by just 0.8%, showing the contribution there of houses to the total result. And when we look at the full year, so that's year on year, ending May, houses are still down 3.7%, but units, really underperformed over the annual comparisons, down by 17.4%. So look, we seem to be creeping back slowly with houses, Michael, but units are still the big problem going forward. And we know that approvals for units do take a while to be generated. And then, of course, the problem with that is even an approval for a unit, the horizon is 2 to 3 years before it becomes, a livable property. So even if we got a rise in the number of unit building approvals, they're not going to translate into, on the ground livable dwellings, which means still some problems there for supply in our housing market. And of course, at the pointy end of that, it's the rental market that's suffering. And when we look at the capital city results, the trend results with the year-on-year trend, we're still down by 38.7% in terms of our annual building outcomes compared to the previous peak, which was way back in 2016. So even though maybe that trend is starting to flatten a little bit, it's still a long way short of where we need to be to produce a balanced housing market. And again, when we look at the breakdown between houses and units for capital city annual building approvals, we can see really it is a unit story there. Units are down 56.5% on the annual comparisons compared to the peak way back in 2016. And houses are now starting to pick up, still below the pre-COVID peak there, but certainly the trend is on the rise for house approvals. And we've just worked through that period where we had the previous government's home builder allowance, which created that surge in activity, brought forward a lot of demand, of course, and we're just probably in the process of normalizing our house building approval cycle, which is governments are capable of managing to some degree because they can release more of the broadacre land to developers, but units no such relief because it's still very much constrained by local planning laws, and that's why we're still seeing that shift downwards in the trend for unit approvals, Michael. And when we look at the capital cities, comparing their previous peaks with what's happening currently, so this is the annual series on a capital city basis versus the previous peak, and they're all down, with Brisbane actually the worst there, down by nearly 80% for units. Quite extraordinary given it's a big unit market. And of course, that reflects the Brisbane building boom way back in 2016-17. and that was supposed to create an unstoppable oversupply of units in the Brisbane market. And of course, that's been proven to be completely wrong, with rents skyrocketing and unit prices skyrocketing in Brisbane. But no real differentiation there. Perhaps Adelaide. Well, Adelaide is the best performer there, but still well down on its previous supply peak. So this is why we're seeing higher rents. In all our capital or major capital city markets, Michael, because the undersupply is quite apparent in terms of the lack of building that's happened in houses and units in all our major capitals since the previous peak, which was typically back there around 7 years ago. When we look at the results for each of the capital cities, no surprise there for this year so far in terms of the number of approvals. So Melbourne well ahead in terms of total homes approved, over 15,000 versus Sydney 11,000, Brisbane nearly 7,000 over the year so far, and Perth ahead of Brisbane there with again over 7,000 homes approved for building over the first 5 months of this year. So Perth continuing to charge ahead, and plenty of demand there for Perth in terms of homes, which is translating into home building levels. And Sydney charging ahead now in terms of the top capital city for unit approvals. So yeah, look, maybe some better news there, Michael, particularly on house approvals. But I think we need more apartments, to really soak up the demand coming through. And when we looked at the rental market, I think that sort of explains it, with the shifts from migration due to holiday pauses, mid-year, early year, autumn holiday pauses, causing at least some improvement in that market. But the real improvement would have to come from more supply coming through, particularly for units, and that's just not occurring. We're continuing really to fall backwards. And even if we started to reverse that, it would take years for it to become a tangible outcome in terms of putting downward pressure on rents, which I think the only thing stopping higher rents now is the lack of growth in incomes.
Well, Andrew, last year the Albanese government mentioned how we were now going to have to start building 1.2 million dwellings over the next 5 years, and the starter gun has now gone off because it's now
That's
July
right.
when this new system was meant to start. I don't know why it took so long for it to get going. And sure, these figures are for May, but there's no suggestion that we're going to get anywhere near those numbers. And as we keep mentioning, just because building approvals have occurred, that doesn't mean, especially for apartments, they're going to come out of the ground, because currently the cost of developing most new apartment buildings isn't financially justifiable, and builders and developers aren't prepared to take a risk. In fact, many builders can make easier, safer money working on many of the public sector construction and
Yes.
infrastructure projects. So there's a competition for labour as well. It'll be interesting to see how it all pans out. But the bottom line is we're not going to catch up, and we're starting off with a huge undersupply in the first place.
Yeah, and look, the government's plan, and I mean, they don't do the building; they can set the
Yes.
environment for builders, but the builders have to do the building, as you said, Michael. And even though gladly we've seen house building costs starting to fall, but it's the rate of growth is still high, and the actual costs are still high. So there's some way to go before builders can feel some relief from those very high building costs, which, as you said, they act as a constraint to building. And look, the government's plan, they're not building it; they're putting in what they say is the process for getting builders up and about. But the constraints there are beyond what governments can really fix. And just as an example, as you said, 1.2 million over that six-year period is 200,000 houses a year that we have to build, not just approve, but build. And our approvals are tracking at around about 150,000 annually at the moment. And they're approvals, Michael. They're not completed homes.
No.
So we're that's 25% lower on approvals than what completions are. And even though we're seeing a little bit more of a positive upswing in houses, which, as I said, I think the government has some control over, state governments have some control over. We're seeing no sign of a consistent upswing in units. And I think that's that's the key here. We need to see that before we're going to get anywhere near those targets. But look, a lot of this is political speak. That's with election periods coming up, they have to be seen to be doing something. And uh, the government's really can't do much in these circumstances, because to a large degree, when we're talking about systemic oversupply, that the system's broken. We just can't really fix it. So it's all about securing property, because it's only going to get harder to secure, because there are going to be fewer of it and more people looking for roofs over their head.
I just wanted to remind you that this is not specific investment advice, because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. Andrew, those figures are clearly retrospective, and you're now making some suggestions of what's going to happen moving forward. But we also like to see what's actually happening on the ground each weekend in the auction markets, because it gives us a good indication of how buyers and sellers are feeling. It's winter, it's cold, particularly in Melbourne. I know in Queensland people are complaining the temperatures are getting down to 20 degrees. Boy, in Melbourne would be happy if they get up to that. But people are still going out to auctions. People are still putting up their hands, Andrew.
Yeah, it's quite remarkable, Michael. Yeah, and we've been saying this really for most of the year, that we've seen a surge in listings, in auction activity, and it's translating into very high levels of auction sales for this time of the year. In fact, record auction sales for this time of the year, or over the first half of the year, which shows you that there's plenty of confidence from sellers in the marketplace. But that's what we typically see as the cycle sort of regenerates itself after a downturn. Of course, that was in 2022 with those higher rates. We saw buyers, moving into the market early last year, and prices then starting to rise, recover, and now we're seeing the sellers who, of course, take a little bit longer to get back following a downturn, are now back in the market in force. And we continue to see that, Michael, with the latest weekend auction results, which are a great forward indicator, of course, of what's happening in the wider market. So we're now in the trough of the market. The winter, July, is the trough of our housing market, of course, notwithstanding January, because that's when everybody's away. But
Well,
July
everyone
is.
seems to be in Bali at the moment too with the school holidays. Almost everyone I've spoken to has been away recently.
Yes, well, I'm up in Queensland, and the weather's been a little bit ordinary. I feel sorry for the school holiday people, uh, but it'll get sunny sooner rather than later, I'm sure. So, but no such chill in the auction market, Michael, if I can use that tired
Uh-huh.
old analogy. There's still a little bit of heat being generated, and it is, as I said, it's the middle. This is when we do really see the trough of the market. School holidays started in New South Wales this week. They're finished in Melbourne, finishing in Melbourne and in Brisbane. But despite those sort of mixed periods of demand as a result of seasonal impacts, school holiday impacts, distractions, we're still seeing some very positive results in what is over the next week or two or three, until we get really, well, over the next month, till we get into mid-August, typically a period of the market which is highly distracted. People are sitting around now. This part of the market, this mid July August market, is where people start thinking about what they're going to do in terms of their property decisions before Christmas, before the end of the year, and that's what generates the spring selling season. But we're still seeing a very heady auction market for July with our latest results. And the results from Saturday re-emphasising that continued strength in our weekend auction markets despite the mid-year blues, which are supposed to occur around about this time. 730 auctions in Sydney, which was actually higher than the weekend before, Michael, where we had 721. A
Yes, I
76
noticed that. I was surprised with the school holidays that there were higher numbers.
Yeah, 76% clearance rate as well, which was a stronger clearance rate. So plenty of life in that Sydney market, Michael. And of course, when we look back to the same weekend last year, just 467 auctions, a clearance rate of 77.4%. So even though auctions were well ahead of a year ago, the clearance rate not so much behind. Quite a remarkable result there for that extremely resilient Sydney housing market, Michael. And, we're likely to see these figures translate into more prices growth in Sydney. But yeah, as you said, notwithstanding the beginning of school holidays, that was a very positive result for the Sydney market. Melbourne, perhaps a little bit more uh, responding to mid-year activity, what we would expect. 600 auctions, down from 799 the weekend before. Clearance rates pretty similar to the weekend before, and that's where Melbourne's been tracking in those sort of mid 60%. But again, when we look back over the year, Michael, Melbourne auction numbers well ahead of where they were a year ago, but clearance rates well below. So perhaps that tells the story of the Melbourne market, but still plenty of confidence in Melbourne sellers out and about with those, very high July numbers for auctions. Brisbane also higher. Clearance rate higher in Brisbane. So that's actually a strong result for Brisbane, 62.6%, similar to a year ago. But again, with Brisbane, you can see the auction numbers well ahead of a year ago. Same story there for Adelaide, although its clearance rate is lower than where it was a year ago. Look, Adelaide a year ago was producing, remarkable clearance rates up to 90% every weekend. Still a very good result there. For Adelaide, remains the strongest on clearance rates, the strongest auction market of the capitals. And Canberra, numbers down in Canberra, again, school holiday issues, but the clearance rate is really starting to pick up in Canberra. We've been discussing this for a few weeks now, Michael, those early signs of the Canberra market. Really starting to consolidate now, 69.5% clearance rate. Yes, it came from smaller numbers, so we need to take it with a slight grain of salt. The volatility of smaller numbers can reflect some changes in clearance rates. But even though the numbers were the same as a year ago, the clearance rate not too far away. So some good signs there, continuing for a pickup in the Canberra market, which was in the doldrums over the second part of last year. We can see that Sydney trend, clearance rate in Sydney so far over the month, 76%. Well, it's only one weekend, but certainly stronger than where it's been for a year in Sydney. So we'll see if that is maintained over the next few weeks. Maybe not because of school holidays. Melbourne well down on a year ago, and just starting to look like a winter market, really, as we would expect in Melbourne. Brisbane, the same as a year ago, a little bit lower, but tracking, over 60% is a very good result for Brisbane. And again, a pickup that was a little unlikely given the time of the year, although the Brisbane market doesn't tend to be as affected by the seasonality of the mid-year seasonality as other markets. Adelaide, around about where it was a year ago, still the strongest market in the country. And as we said, you can really see that trend rising, Michael, in Canberra now, tracking ahead of where it was a year ago. So after that weaker period through September through to the end of the year last year, Canberra now starting to pick up. And typically, as we've explained, Canberra does track the Sydney market. It did disengage in the last few months of last year. So we've been sort of waiting for that to pick up, but certainly the signs are quite positive there. So if you're looking for those clearance rates, you can get the capital city results snapshot every Saturday night on my LinkedIn account, Doc Andrew Wilson at LinkedIn, around about 6:30. And Michael publishes the full national report on a Sunday, which includes the regional breakdowns for Melbourne and Sydney, and the top 10 sales for all the capital cities under the hammer. As I mentioned, we've had record auction activity over uh, the period to the first weekend in July versus that's from February versus the same last year. Sydney up 34%. Now these are sales, so this is looking at the clearance rate and matching it with the listings numbers and coming up with the actual sales that are occurring. So 34% more sales so far this year compared to the same period last year, Michael. In Sydney, 25 point, and that trend is still rising in Sydney. 25.2% increase in Melbourne. That trend just starting to ease a little bit, but still well ahead of where it was a year ago. Brisbane up 18%, as similar to Sydney. The trend is rising still in Brisbane on a number of auctions. Same story for Adelaide, up 13.6% with the trend rising, and Canberra now above the board with a 2.5% increase, which is steady in terms of the trend. But some big numbers there reflecting continuing robust housing market activity over the first 6 months of this year. And if you're looking for that, a copy of that latest weekend national auction market report, there's a QR code which will give you a link to that particular file, which is published on Michael's websites of a Sunday morning. So that's it for us this week, Michael.
Well, as always, there's going to be news coming up, and once a week we get together to give some clues as to what we think is going to happen from it. Look forward to catching up with you again next week, Andrew.
Yeah, lots more information this week. We'll particularly be looking out for that home loan data, which will be released this week, Michael. So see how home lending is going, particularly given we've seen a bit of a surge in lending to investors recently. See whether that trend can continue. We might even do a breakdown and see where the lending is occurring on a state by state basis as well. So look forward to that next
That'll
week.
be very interesting. Catch up with you next week. Thanks, Andrew.
Thanks, Mike.